Hello investors and welcome back to Just Randy Stocks. Let's talk about Senseonics, or ticker symbol SENS. Let's look at the charts first, and then I'm going to tell you why I'm pretty excited about this play. But long term, we need to talk about some risk analysis, and I want to tell you how to protect your money, especially in a bear market. I think it's really important to make sure you're mitigating your risk. And in this bear market, there's a lot of opportunities to get some really good plays that have better financials. Let's talk about all of that. Let's go ahead and get started. The last time I talked about Senseonics, we talked about watching this line at 266 to see if this provided any level of support. We fell through that, and today it looked like this gained support at 257. Now yesterday, as all the stocks started declining, this started really getting support at the end of the day. And if you zoom out on the chart, you can see the last 3 months, this has really been consolidating this price action. So it hasn't been huge moves and swings. If you got in low on this play, you're still probably doing pretty well, and you've been looking for opportunities to cost average down or add to your position for the FDA approval. And that's what this is all about, right? We're looking for that catalyst, that upcoming catalyst. The CEO said in his news update in a few weeks. And so we're thinking by the end of the month, but I want to talk about when you want to exit this play. So we've got a line in here at 257. This is looking like it's been holding up, but I wouldn't doubt that this possibly tries to test that line, but it looks like it's gaining some good support. There's not a lot of volume, so we should maintain a good, steady price action on this one. Now, I believe this could be a massive catalyst, this FDA approval. So let's take a look at the last time we had a press release was on the 5th, and on the 4th, we got that business update announcement, and that's what we're really talking about. So as far as the call options and put options, let me explain why I believe we're seeing an increase here on the 250 for the price action for the puts. I believe it has to do with a few things, right? People are counting on this massively going down after they either report earnings or after this breaches that catalyst of going up massively, and then probably is going to come down hard and crash, because I think a lot of people are going to sell out of their position. So if this happens before earnings, if we get FDA approval before earnings, then I see this going up and coming back down. I would not want to be in this personally for their earnings, because I don't know that they're going to hit it, and I think they've got poor profitability, they've got unimpressive financials, and those could turn around, but it's not going to happen with this next earnings. So there's a lot of companies out there that have great financials. If you're in this play, you want to make sure you set that stop loss. And I would say don't take an unnecessary financial hit on this play. When it's been so stable, you should be able to set a stop loss. Now, I think it's important to talk about a stop loss real quick, just considering that we're in a bear market and there could be some volatility, and this is a penny stock. So say you got a cost average of 253. Say you're in at that price. Then you would want to set your stop loss at 255. Those are just examples, but obviously you don't want to set your stop loss under the amount and take a loss. It's supposed to stop you from taking a loss or be a stop loss. So that's just an example, and of course, all of you know where your price average is, but I would say don't take unnecessary losses. Take an opportunity to look at the charts, figure out where you want to exit your position, and maybe, like I was saying before, you're perfectly fine with cost averaging down because you're along, but I would strongly recommend setting up those stop losses for your trades in a bear market. So something else that I found encouraging about this play was there were some date resets on the FDA website. So for those of you looking to navigate to this information on your own, Senseonics PMA or pre-market approval will get you there. You can also type in things like Senseonics PMA approval, and it'll give you the link to go straight to where I'm showing you this information, where it's got page last updated 1/17/2022. Now, this is completely speculation, and I'll always let you know when I'm speculating, and I do often speculate on this channel. And I'd be encouraged to hear what you think in the comments below. But the last time this was updated on 1/3 1-4, they came out with a press release. Now, this was Martin Luther King Day, and I'm not sure that anybody from the government was working on MLK, and we didn't get anything this week, especially on the 18th or Tuesday when we came back. So I don't know how valid this is, but it does look like there was some kind of function check update process that they would conduct there, and it's just encouraging to know that it looks like things are being touched and we could see something happen by the end of this month. That's completely speculating. So those are generally my thoughts, but I just wanted to remind you about the risk on this play, dismal finances, postponement of really being able to get this launched, and not only get it launched in the United States where we believe that would run up the revenue, that it's going to take 45 days at minimum to get this actually in consignment inventory. So we know that. So financials, they're going to take some time. They're going to take some time. Postponement of Omicron variant, those things are definitely going to slow things down for this company financially. So going into their earnings, once that's released, once it's actually showing up on their press release right here, once they do a press release for their earnings, I would say mark that date down. Make sure that you are thinking about whether or not you want to stay in this play through earnings. I think you would be taking some unnecessary risk going into the earnings. Of course, anything could go up or down. There is nothing tied to a share price in an earnings release typically, but just look what happened to Netflix. Look at what's happened to a lot of these stocks. So I would just say, protect your money. If you're long on this, you've got a lot of long-term conviction on the stock. I would say it's probably going to take them some time. You could just see that dip as a buying opportunity. You don't want to exit out of your position. Drop. You're not worried about it dropping. But for those of you that are looking to swing trade this, which I think a lot of people are, and they're looking at this as a catalyst, I hope this video provides you with some useful information. So that's all I got. If you enjoyed this type of content, be sure to subscribe to the channel, give the video a big thumbs up, and I'll see you in the next video.